Hey there, and welcome back to our personal finance series. Today we're discussing debt paydown basics, an overview of strategies to becoming debt free. If you're feeling weighed down by debt, you're not alone, and you're definitely not stuck. Today we're talking about how to destroy debt for good. We'll cover an overview of practical strategies and the steps to build your own debt elimination plan. Let's get started. Let's start with a quick reality check. Not all debt is created equal. Good debt is money borrowed to build your future. Think student loans, mortgage, business loans. These can help you grow your wealth or income, like a student loan, over time. Then we have bad debt. This is usually high interest stuff like credit cards or payday loans or even high interest car loans. Money borrowed for things that lose value or don't generate you income. The key is to minimize bad debt and use good debt wisely. But I will say that there is one caveat for student loan debt. You need to actually pay attention to what you are going to borrow for your schooling versus what the career you are choosing makes. And if that career will not cover your student loans, it is best to think about changing directions before you've taken out those student loans. Now, on to the sneaky side of debt. Interest. What is interest? It is the payment that the creditor, the bank, or the credit card company, for example, receives for lending you money. If you have $3,000 on a credit card at 20% interest and only pay the minimum, it could take you over 15 years to pay off, and you'll pay more than double in interest of the original amount. That's the power of compound interest working against you. The takeaway, the longer you carry high interest debt, the more it costs you. So, how do you actually pay off debt? Well, there are two popular methods, the debt avalanche and the debt snowball. The avalanche pays off debt with the highest interest rate first. This saves you the most money in the long run, while the snowball has a different approach. You pay off the smallest balance first, then roll the payment into the next smallest, giving you quick wins and keeping you motivated. While both work, you need to choose the one that fits your personality. If you need motivation, you should definitely go snowball. If you want to save the most, you should go avalanche. However, my personal favorite is to do a hybrid of both. You start with the snowball until you have 2 or 3 quick wins under your belt and feel good about your ability to actually pay off your debt. Then switch to the avalanche. That way you maximize your savings in the long run and are able to pay down your debt faster. Next, let's discuss student loans. They can feel so overwhelming, but you have options. Federal loans offer several plans, income-driven repayment plans, which cap your payments based on your income. And there are forgiveness programs for certain jobs or after a set number of payments. But the one tip I would say is if you're struggling, reach out to your loan servicer. Don't just ignore the problem. And always explore your options. Don't default to the standard plan just because it's the easiest. Now, let's move on to credit cards and creditors. Did you know you can negotiate with your creditors? Ask for a lower interest rate, even a payment plan or a settlement. It never hurts to call and ask. The worst they can say is no. And don't forget your credit score. Paying on time, keeping balances low, and not opening too many new accounts gives your score actually a quick boost. The goal is to keep your balances below 30% of the amount available to spend on that card. That is the key metric that they look at when they're managing your credit score. So there's another option though. So let's say you don't get where you want with your creditor for a payment plan or a settlement. You can use something called debt consolidation. Now, this is a lovely thing to do as long as you avoid new debts. What does debt consolidation actually mean though? It means rolling multiple debts into one payment, often with a lower interest rate. It can make your life simpler and save you money, but you have to not open up new credit cards or rack up new debt. It's not for everyone. Now, what are the pros? One simple payment, like I said, lower rate often, and it can improve your credit score if managed well, as in you make the payments and you don't take on any new debt. What are the cons, however? There can be fees associated with it, making the total cost higher potentially. And if you have problems managing your temptation to open cards or buy new things, you could rack up new debt and end up being in a worse situation than you were before. So it is not a fix for underlying spending habit issues. Those are all things you need to think about if you decide to go this route. So we've talked about all different types of debt. Now let's talk about how we build a plan to help you get out of it. It's actually pretty simple. First step, listing all your debts. It's all of them. Payday loans, student loans, mortgage, anything you have, credit cards, you name it. If you have to pay it back, it's a debt. If you owe a family member money, you should include it. You need to include the type of loan it is, the balance, the interest rate, and the minimum payment. Next, choose your strategy. Remember, we briefly touched on the two main strategies that people use to pay down their debt, Avalanche or Snowball. Pick the one that works best for you. Next, track your progress. And by this, I mean use a debt calculator and map out your timeline. These tools are the way to make sure you are doing what's best for you and your family because you can see it. You see all the payments you need to make and how much you need to pay and how long it's going to take. It'll help you stay on track and track your progress. That way you can celebrate every win, no matter how small. So you could do this by yourself. You could write it all down, type it in a spreadsheet, and manage it yourself. Or you could use a done-for-you product designed to help you manage your debt paydown journey. If you're ready to destroy your debt, grab my Smart Payoff Debt Payoff Calculator and start your plan today. If you enjoyed this content, please like and subscribe, and don't forget to check out my Smart Payoff Debt Payoff spreadsheet, which helped my family get out of $20,000 of debt.